Hello traders, welcome to the live webinar. My name is Chris Forsyth from Elite Currency, and we're looking at the 39th webinar already of our weekly webinars where we take a look at the ECS news and trading in general and the markets, of course. So let's do that. Let's take a look at one of the questions from last week from our audience in the Google form that we have. And the question from Anne was basically, hello. She said, when do you plan to go back to 5% risk? And I think that Anne is referring to Ultima EA. So, Anne, I hope that assumption is correct, but I think that's pretty likely. But basically, the answer is the same for both Ultima EA and Rush EA, which are now traded at 3% risk per setup since the drawdown exceeded the 60% level. And you can see that that's just a very unlucky thing because it just exceeded it by a bit. We decided to go down with the risk, and then we got actually some good months in first quarter 2021, in fact, with Ultima EA, as you can see here. So Ultima EA, of course, by the way, from Mislav Nikolic at Bull Capital, of course, for full transparency there. So yeah, at what point is the question from Anne, are we going to go back to 5% risk per setup now that we're at 3% risk per setup? So the plan is, and still is, to increase it if we get an upside, a momentum to the upside, followed by a higher low. Now, alternatively, we could also decide just to keep at 3% risk. We're open in a way to both directions. It also depends on you, the trader, what you prefer. I think that both risk per setups are okay. 5% is really the max, though. I would not go above that. That is way too much. And 5% in itself, of course, is quite is because it's the max. Obviously, it's very high risk. 3% obviously is more medium. It's still high risk, but it's high medium, let's say. So there is less drawdowns and might be more suitable from a trading psychology point of view. So we are even contemplating just keeping it on 3% risk and leaving it at that, just to lower the volatility and make traders feel a little bit more comfortable with the risk that is taken, because it's not only 3% risk in total, it's 3 or 5% risk per setup, and there could be multiple setups open at the same time, which means that the risk of the account is not 3 or 5 at one point, but it could be if there are 2 setups open, 6 or 10%. If there are 3 setups open, 9 or 15%. If there are 4 setups open at the same time, 12 or 20%. So that's a decent amount. And if those 4 trades go into a loss, of course, that's a decent chunk of the capital that is lost in a relatively short period of time. So if it's 12% rather than 20%, that does matter, or that is a decent difference there. So yes, 5% risk per setup gives more potential upside, of course, but at the same time, larger drawdowns, more risk. So that's a balance. We decided to move to 3% at an unlucky time, but that was according to the rules we had. When the drawdown gets breached, we're going to reduce it, and we stick to the rules. So you can't really blame yourself for sticking to the trading plan that was devised or created at the start, right? So just a bit unlucky, though. That's for sure. And I wish it were it would have been different, but it is what it is. And it's still better to stick to your plan, your trading plan, because you never know. And if it would have not been going up, but still one more downside, then we would be happy it's 3% risk, right? So in any case, we got the upside. That's good news. Some gains better than no gains. Now, of course, the gains are a little bit less than they would be with 5% risk per setup. So some traders, therefore, are still in negative territory or at break even. Maybe a few slightly in profit. And that's because it depends, of course, as I mentioned before, where you start. So we had some traders starting in October, for instance, and they're down because October is anywhere around here, and yeah, if you start at the beginning of October, you're still down quite a bit. If you started end of October, you're maybe around break even or slightly negative. And of course, it takes time. If you went through a 50% drawdown, that means that 50% of the capital is lost. That means you need 100% gain, right? 100% gain to go back to break even. These gains are nice. These are very excellent gains, in fact, plus 52%. But if you had a 50% drawdown, then this 52% gets you back to about minus 25% loss, and doesn't get you back to break even, right? Yet. So if your drawdown was 30%, then you are at break even. So it depends on how heavy the drawdown was that you went through, depending on when you started. If you're at break even or still down, and yeah, these gains. If you start at the beginning of January, of course, you're up 50%, right? Because you didn't have any drawdown, right? So it all depends on when you started. Well, that's something we are going to try to improve with future plans, where we have a portfolio of EAs that create a more stable and consistent performance on a monthly and quarterly basis, specifically quarterly basis, so that the starting moment is less important and anyone can step in or exit without much worry about whether a drawdown is around the corner or a drawdown has just ended, So because we see in the behavior of traders something very logical in fact, but unfortunately not so good, is that capital is added at the end of a winning streak because it looks like things are going great, and removed when a drawdown is taking place. The problem is that when you add capital at the end of the winning streak and remove it at a drawdown, you're adding capital at the beginning of the drawdown, right? Typically, or close to it, and removing it in the drawdown, which means it makes it even more difficult to get out of the drawdown. Let's say you have 10K you add here at the peak. Then you remove, it's down to 5K. You remove half of it, so you have 2.5K left. So you need to get back to 10K, or 7.5K actually is your net investment, right? 2.5 minus 10 minus the 2.5. To get back to 7.5K with 2.5K, you need 200% return. So you need 200% to get back to break even. So that's the unfortunate danger of withdrawing in a drawdown. And of course, starting with capital at the peak is something that can happen. I mean, you never know. It's difficult to time the investment entry, and that's what the portfolio is trying to avoid. That we have a more stable, consistent approach, more like in a way, EURUSD has that consistency, of course, right? But the gains are on average lower, of course, than Ultima EA. So with the portfolio, we're trying to find a mix between the two. We're trying to find higher gains as EURUSD, but they'll be less than Ultima. But at the same time, the drawdown will be less than Ultima and more similar to Zeus. So it's kind of like a mixture with that portfolio. So that the entry doesn't matter, and removing capital is also more flexible, because removing capital with Ultima during a drawdown really makes it difficult to climb back. So with the portfolio approach, we hope to make it easier to add capital and remove capital without really serious consequences for the performance, if you see what I mean. So this is what we're working on, and I do think that we're getting close to finalizing all the details. I can't say when we'll be ready to launch it, but I do hope in a few weeks. That might be a bit too ambitious, but I really think that we're getting closer and closer to that. So I hope this answers the question of Anne. Oh, sorry, actually, to get back to that question of Anne. So what we're looking for is a higher low. If we do increase it to 5% risk, what we're looking for is a higher low. So we had a clear push-up. Well, no, I wouldn't say a clear push-up. We had a push-up. This was a little bit threatening, but we had a higher low, in fact. Then we had, this is a more clear push-up, and now we're getting a bull flag. If you want to, analyze the equity curve from a technical chart point of view, if you think that is a fair way of doing that, So what we're looking for is a higher low and a bounce. Not up in here, but a bit lower, maybe back to this level. And if you get a retracement and a bounce, could signal a new climb up. So draw down a little bit higher and then down. But I don't know. This is the current plan, but I think we're also seriously thinking about just keeping it at 3% risk. But let us know what you think. I mean, we're open to discussion, dialogue. Of course, only respond, please, if you are actually trading in the PAM. If you are not, then it doesn't make sense for you to respond because you're not participating with actual capital in this PAM. So only those that have actual capital in the PAM. Please let me know what you prefer through email or in this chat or in this webinar. So either directions could make sense here in this case. Or if it goes, I would say go back to the zero line here could be enough already of a retracement. I mean, we're looking for some kind of drawdown, some smaller drawdown, 10, 20% could be already enough, just to avoid that the problem is that, just thinking about it this way, the problem is that if you go up to 5% risk now and there's another drawdown coming, you're making yourself vulnerable at that point. So that's why we want to have some drawdown already behind us before even thinking about going up the risk again, because otherwise you're really vulnerable to that particular direction. Okay. So that was the main thing I wanted to tell you. So thank you, Anne, for that question as well, by the way. Appreciate it. Regarding other EAs, well, we can take a quick look and then take a look at the markets, if you agree. Let's take a look at the Russia EA. The same thing is valid for Russia EA, once again, also for Mislav Nikolic. Same thing, also, it went down to 3% risk per setup. And what we're also looking for here is kind of the same pattern. We actually had some drawdown here already, but the overall picture was not that interesting for us to, at that point, increase it to 5% risk. So we rather kept it at 3% risk. And with the Russia EA, we prefer a little bit more upside first before thinking about increasing it to 5. So it's a little bit different. We want to see some gains first, actually. So another swing up, and then maybe a lower high before doing that. The Russia EA is up a little bit though this month, 7.4, but we need to be a little bit more to get that swing up. We'd like to see it move up into this plus 60 region over the next months before doing that. But okay start so far, almost 7.5. Other EAs, let's take a look at Zeus. We're about halfway April now at this moment. And the start of the second quarter. And Zeus EA doing well again. Up 4 last month, up 1.1 this month. A little bit of a floating loss here last week's, but it got closed twice. Now it's a small difference again, but usually those get closed within a few days. What else? We have my SWAT EA and from Carlos, of course. Let's take a look at that. Moving up nicely. It had a slow start, or I mean, slow start. It had a great start. Excuse me. I mean, it had a slow activity of trades since March 19. Not many trades, but the trades that did take place were mostly profitable, and we're back to plus 19 after hitting a low at plus 14 here. So profit factor is still a stunning 2.04. That's really great. plus 64 pips, plus 640 pips, excuse me, in about 2.5 months of trading so far. 2.2 in April. So happy, almost 20% up. Happy with this. Let's take a look at other SWAT EAs on DAX. No trades in April. Somehow, I will check if that's correct with Carlos. All right, I'm checking with him. It ended on a great note in March, but no trades in April is something I'd rather check if everything is working properly. Maybe it is because it is a 1-hour chart, so can be slow sometimes. So it could be, but I'd rather check. DAX 50-minute chart going into some drawdown, as you can see at this moment, approaching 15%. All right, quick look at the LOA EA. That was not doing so well. Let's see if April is anything different. And a little bit, it's finally showing some positive, plus 4%. So that gives some hope. Let's see. And SWAT, a different SWAT EA based on the moving averages is down in April, minus 4.8 so far. All right. Anything else? No, I don't think so. Let's take a look at the markets then. Yeah, so we have Ethereum pushing up for a higher high and Bitcoin breaking to the upside, 62,500 at the moment. And yeah, if you saw my wave analysis yesterday, perhaps, let me show you, let me quickly show you that so that you can see, just in case you missed it, what I was showing. And to see of course, to see our analysis from Nennett and myself, go to Research and Education, click on blog. And yeah, you see that I was looking for, I saw this, I changed my mind. I saw this as an ABC completed within 4. So 1, 2, 3, 4. So I was looking for a 5 of 5, but I think that they're part of larger wave 3s, in fact, and they could go further. Of course, no one knows how far Bitcoin could go in this year, in this wave up. So maybe this push up is the last one. I don't think so myself. I think there's a 80% chance at least of price going up several times still in several waves. And I don't think that this will be the final wave up. And I do think it's a wave 3 of 3. But yeah, if you wanted to be conservative, of course, then it's still good to take profits sooner if you're nervous about that. But I think that this would just be one breakout still of more breakouts coming. The momentum is, in my view, too strong. So that's why I labeled it 3 of 3, 5 of 3 of 3. Anyhow, to the lower time frames, as you can see, I did a 5-wave finishing C of 4, and then we had a 1, 2, 3. And what I liked about this was a clear correction, 50-pip bounce, and then the break, and this was showing momentum. So I was looking for was just a correction. The price respects the 21 EA, and I was expecting a break and follow through to the upside. And that's what happened. Let's take a look at that now on the real chart. Live chart, excuse me. And that's what happened, right? On the 1-hour chart, its price was about here, as I said, and that's what I was looking for. I was looking for this kind of correction, this kind of triangle pattern, and it respected the 38.2 fib. It missed it by a few pips here at 59,254. It went down to 59,300. Very marginal difference there. But as you can see, this was a wave 1, 2, 3, And this pattern confirmed the wave 4, and then you can see the bounce at the 38, the break above the 20 MA, the break above the fractals, and the price just surging now at this moment higher. So I think this is a great confirmation. This pattern really confirming that, and I think we're seeing now momentum kick in, because ultimately now the 60K level is being broken. Of course, today's daily candle will be important. If it's a big sell-off at the end of the day and the close is not near the high, that would not look good to me. I still think that in that case, price will just make a correction back to 58 and then bounce at 58 or maybe 56 and go up again. But of course, a big wick would indicate some selling pressure and some retracement still probably, and we would have one more retest of the support trend line, and we would have a continuation of the ascending wedge after a false breakout. But this is an ascending wedge that broke to the upside. If the daily candle closes near the high, then it's a successful breakout, and momentum should kick in to push us further. With nearby targets, of course, logical in my view, logical round levels like 65K. Well, first 62.5, but that's been already reached. Then 65, then 67.5, then 70, then 72.5, then 75. But if you look at fib levels, for instance, if we put the fib from here to here on this wave 3, right, then minus 272 target, 65.5, and 75 is the minus 61.8 target. So today's daily candle important. I expect a bullish candle and the momentum to follow through, just like what we had basically here with this breakout back in February, where we had the initial break above 20,000, the ABC back, and a follow through. I expect the same here, to be honest. I'm not sure if we'll get this kind of momentum again, or this momentum could slow down, because here we had basically a push of 23,000. Ooh, here we actually had even more push. 28,000. But of course, sorry. Here's the start. This was actually a 30,000 push. If it slows down a little bit, this is 28. So if it's only a 20,000 push, let's say, then it could go to 70 or 75,000 before making a new correction. And a bit of a slower pace to the upside, I think, could make sense, because of course we're getting into higher levels, obviously, and maybe a correction at 70, 75K could emerge. 75K around psychological level could make sense, by the way, and a correction there. If there is a triangle pattern there, then and another breakout, they could push then higher, maybe aiming ultimately at 100. For instance, or higher. Who knows? I really don't know I have no idea what the end goal here is for Bitcoin. I've seen all kind of numbers in opinions on that, ranging from anywhere from 100,000 up to maybe 250,000 even in this particular year. I don't know. I'll keep my focus limited to the short term for the moment, and I do think that there's a good chance of, an 80% chance, I would say, of reaching 70, 75,000 in this swing up. And if there's then a chart pattern after that, then yes, I do think there's a decent chance of another higher high, at least, that could get close to 100K. That's how I formulate it myself at the moment. Maybe I'm too conservative, but that's how I see it at this moment. We'll have to see how this breakout takes place. Same as for Ethereum. And I personally made some small positions, added some positions in the wave 4 here and here. Those are my newest positions, and I haven't added anything after that. And on Ethereum, my newest positions were here. No, sorry. Here, as we were testing the 38.2 fib. And I added here, as I made another dip around 1620. 1470 and 1620 were my newest positions, as it was testing the lower zone of the 21 EMA. Haven't added anything besides that. Ethereum is doing maybe even better because it already broke above the top earlier where Bitcoin didn't. So anyhow, that looks, let's check it out. Let's see the daily situation ended today, how the breakout is doing. Or that's what I'm going to do at least. But euro dollar, in my today's analysis, I think this is a wave 4, and so far I think we see that. We see bullish candle. I would like to see a re-break above the 20 EA with the blue candle. That should confirm the upside to 120. And pound USD also looking bullish, but yeah, a little bit slower against the moving averages here, long-term moving average, whereas the euro dollar has the moving averages below it. I prefer the euro dollar, but I could see pound dollar move up too, by the way. Just, I think that I have a preference for the euro dollar, but euro pound did move up a lot. That's one of the reasons why we see the difference between the euro and the pound dollar. For those that followed my analysis more carefully, I mentioned also on Apple a retracement here, ABC retracement, and head and shoulders, left shoulder, head, right shoulder. Personally, I traded that or invested in that as well in Apple myself with that pattern, and that's going well. As you can see, head and shoulders playing out, bounce, and good momentum to the upside. And last but not least, top of my head at least, Euro New Zealand. Let's see. Yeah, I was looking for wave 4, 5. That happened, although it was quite choppy and took some time, but ultimately it did respect these fibs. No, wait, that's not the right fib, sorry. Excuse me. Wave 4, respecting 38 and 50 fib and moving up, but not as much retracing. I mean, ultimately, when I did the analysis, I think it was somewhere in here. Yes, the euro New Zealand, the euro New Zealand is moving up. There is more power in the euro than the New Zealand, but I must say that the impulse was weaker than I thought, and it hasn't gone up as much as I thought it would, to be honest. So now it's kind of running out of steam earlier, and I would be careful because it hit with 7, it's falling. It still might move up, but I think the momentum is dying down. And yeah, I would, if anyone is still, I'm not in any trades here personally, but I would move it probably the trail stop loss to below these bottoms. Hope for a bounce here, but it doesn't look too good for the upside now, at least. I think it ran out of steam. All right. Of course, as always, please check out our website. We have a lot of things here, research and education. We have our blog with our analysis. We have educational articles. I think you'll find a lot of value in that. Live webinars. We also have my ebook that you can find for only €24.95 in Tools and Strategies. Our manual and automated systems in Forex and CFD, or if you want to try a different category of trading, options and spreads, it's a more laid-back way of trading and capitalizing movements on the stock market. So from our expert Marco Doni, who is on CNBC, or was on, I don't know if he's still there, but he was a regular guest there in the past at least. If you're looking for some free materials, we have a lot of free materials. Check out sponsorships and education. All right, and that's it for today. Thanks for joining, and wish you all great trading, and see you tomorrow in my euro dollar and pound dollar video. Cheers, bye-bye.